All right, so today we're doing a deep dive into Pfizer.
Pfizer.
You know,
Yeah.
the pharmaceutical giant behind kind of everything from Zithromax to Viagra.
Oh, yeah. Big names.
It's a household name. But
Sure.
their journey lately has been, well, a bit of a roller coaster, I'd say.
Yeah, definitely interesting.
We're looking at articles and financial data you sent us.
Okay.
And the big question, is Pfizer a smart buy right now?
It's a fascinating situation.
Okay.
You know, you have on the one hand this massive pandemic success story
Right.
with the COVID-19 vaccine and Paxlovid.
Of course.
But now revenue is slipping
Right.
as the world kind of moves on from that.
Yeah.
And this hasn't gone unnoticed,
Yeah.
not just by regular investors, but by activist investors as well.
Oh, interesting.
Like Starboard Value, who are pushing Pfizer for better returns.
Okay, yeah, that makes sense.
Yeah.
That pandemic boom and bust is
It's a big question mark.
making a lot of folks wonder what's next.
Yeah, for sure.
So for anyone who needs a quick refresher, Pfizer was founded way back in 1849.
Wow, that's a long time ago.
Develop and market a wide range of medicines and vaccines.
So they've got a lot of experience.
Truly massive company, market cap of $159.1 billion.
Yeah, one of the biggest.
But as you alluded to, their stock has been struggling lately.
Well, struggling might be an understatement.
Okay.
It's down over 50% from its peak in 2021,
Wow.
which is a huge drop,
Huge.
especially when you compare it to the relatively strong performance of the S&P 500.
Right.
This gap in performance raises a crucial question.
Okay.
Is this just a temporary dip, or is it a sign of deeper problems within Pfizer?
Well, one thing that definitely jumps out when I look at their financials is that dividend yield.
Oh, yeah.
Sitting pretty at almost 6%.
That's attractive.
And they haven't just been throwing out dividends randomly.
No.
They've been steadily increasing them for over a decade,
Just commitment.
showing a real commitment to shareholder returns.
For sure.
I have to admit, that's pretty tempting from an investor standpoint.
It is tempting.
Yeah.
Especially for income-focused investors.
Right.
Looking for that steady stream of cash.
Yeah. That passive income.
However,
Oh.
a high dividend yield can sometimes be a red flag.
Okay.
Almost like a company trying to lure investors in despite some underlying issues.
Now, trying to cover something up.
We need to dig into their financials
Right.
to see if this dividend is truly sustainable in the long run.
Okay, so let's dig.
Let's do it.
And I have to say, the news from their most recent earnings report was pretty encouraging.
Oh, yeah.
Pfizer just crushed their Q3 earnings.
Really?
Not only beating Wall Street expectations,
Wow.
but actually raising their guidance for the entire year.
That's a good sign.
Revenue jumped a whopping 32%, hitting $17.7 billion,
Billion with a B.
with their global biopharmaceuticals business being a major driver.
Now, global biopharmaceuticals business might sound like a mouthful, but it's essentially the heart of Pfizer.
Okay.
It's encompassing everything from vaccines and anti-infectives
Okay.
to internal medicine and oncology.
So it's like the core of their operations.
It's where the bulk of their revenue comes from.
Okay.
And when we break down those Q3 numbers even further, some key growth drivers emerge.
Right. I'm intrigued.
They're oncology treatments, like the combination of Mektovi and Braftovi, are gaining real traction in the market.
Oh, yeah. I read about that.
Yeah.
Mektovi and Braftovi are used to treat certain types of melanoma and lung cancer.
Right.
And it sounds like they're having a lot of success.
Exactly.
So it's a good area for them.
And it's not just cancer.
Okay.
They're also making a strategic push into the weight loss market,
Interesting.
which is absolutely exploding right now.
Makes sense.
I mean, think about it.
It's incredible how they're tackling so many different areas of medicine,
Yeah, they're not afraid to diversify.
really going for it. And speaking of going for it, they're even using artificial intelligence to speed up
Really?
the usually super slow drug development process.
Interesting.
They managed to cut data analysis time in half,
That's impressive.
which is mind-blowing.
It is.
And their migraine treatment, Nurtec ODT Dura, saw almost 45% revenue growth, which is pretty remarkable.
That's a perfect example of how Pfizer is leveraging technology
Yeah.
to not only improve their efficiency, but also potentially bring new treatments to market much faster.
Sure.
And their success with AI-driven development during the Paxlovid clinical trials
Yeah.
is a very promising sign for the future of their research.
So AI is definitely a feather in their cap.
For sure.
And then there's their oncology pipeline,
Mm-hmm.
which I understand is pretty stacked.
It is.
Yeah.
That Mektovi and Braftovi combination therapy we mentioned is showing a lot of potential,
Yeah.
especially for treating certain types of melanoma and lung cancer, as you mentioned.
Right.
And they're not stopping there.
Oh.
They're also working on treatments for bladder cancer
Mm-hmm.
and other solid tumors.
Wow, they're not kidding around with their oncology research?
Nope.
And to think this is all happening while they're pushing into areas like weight loss, leveraging AI.
It's a lot to keep track of.
It's almost overwhelming how much they have going on.
It does make you wonder how they manage it all.
Yeah,
But that's the benefit of being a large, well-established company like Pfizer, I suppose.
I guess so.
They have the resources to invest in such a diverse portfolio,
Right.
which helps them mitigate risk
Mm-hmm.
and create multiple avenues for potential growth.
That's true.
Yeah,
It's like having a well-diversified investment portfolio.
exactly.
Not all their bets have to pay off big for them to succeed.
For sure.
Speaking of investments,
Uh-huh.
let's talk about their existing products. We know Paxlovid got a recent boost,
Right.
but how are their other bread and butter medications performing?
Well, you're right about Paxlovid. It did get that boost in Q3,
Mm-hmm.
but we need to be careful not to overinterpret that.
Okay.
It was partly due to a one-time delivery of Paxlovid to the U.S. Strategic National Stockpile.
Right.
So it's hard to say how much of that boost will continue in the coming quarters.
Right. That makes sense.
Yeah,
The stockpile delivery skews the numbers a bit.
a little bit.
So what about some of their other key drugs,
Mm-hmm.
like Nurtec ODT Vidura,
Okay.
which did so well in Q3?
Nurtec ODT Vidura is a fantastic example of a successful product launch for Pfizer.
It seems like it.
It's gained significant traction in the migraine treatment market.
Okay.
And as you pointed out, revenue grew by almost 45% year over year in Q3.
Yeah, that's a serious jump.
It is.
It seems like they have a good mix of established revenue generators like Nurtec
Mm-hmm.
and promising new treatments under
Yeah,
development.
they're well positioned.
But what's the overall sentiment from Wall Street? What are the analysts saying about all this?
Analysts seem to be cautiously optimistic,
Okay.
which isn't uncommon when a company is in a transition phase like Pfizer.
Makes sense.
The consensus rating for their stock is moderate buy,
Yeah, okay.
with a target price of $32.75.
So moderate buy sounds like they're not quite ready to go all in, but they see potential.
Yeah, there's some hesitation.
And that 32.75 target price,
Mm-hmm.
that's about 15% upside from where the stock is currently trading.
Yeah, that's not bad.
Not too shabby.
Not too shabby at all.
And another thing that's piqued the interest of some analysts
Okay.
is Pfizer's valuation.
Mm-hmm.
They're currently trading at less than 10 times forward earnings
Which is pretty low.
and only 2.55 times sales.
Yeah, that's interesting.
To put that in perspective,
Uh-huh.
those are significantly lower multiples than many other companies in the S&P 500.
So they're looking relatively cheap.
So what you're saying is
Yeah.
Pfizer might actually be undervalued right now.
That's certainly a possibility.
Okay.
And it's one of the reasons why some analysts believe there's significant upside potential for the stock.
I can see that.
Of course,
Yeah.
we need to consider the full picture,
Of course.
including their debt levels and the potential challenges they face in a post-pandemic world.
Right. Yeah, we haven't even touched on that yet.
There's a lot more to unpack,
Okay, so we've got a lot of moving parts here.
a lot to consider.
They've got this potentially undervalued stock,
Mm-hmm.
a solid dividend,
Right.
and they're pushing into promising new areas like AI-driven drug development.
So there's a lot to like.
There's definitely a lot to like about Pfizer,
Yeah.
but I have a feeling we're just scratching the surface here.
We are. There's a lot more to unpack.
All right, then, let's explore it.
Let's do it.
We'll be back in just a moment with part 2 of our deep dive into Pfizer.
Sounds good.
Stay tuned. Welcome back to our deep dive into Pfizer.
Back at it.
We just scratched the surface of their recent performance, their pipeline, and even their valuation.
Yeah, we're just getting started.
But now I'm really curious to dig into the story behind the numbers.
Okay, let's go deeper.
What can you tell me about Pfizer's financial health?
Well, when you're analyzing a company as large and complex as Pfizer,
Sure.
it's important to look beyond the headlines.
Right, get into the nitty-gritty.
One key area we need to consider is their debt level.
Okay, debt, that's always a big one.
Pfizer has taken on a significant amount of debt in recent years,
Makes sense. They're a big company doing big things.
driven in part by major acquisitions,
Mm-hmm.
like their purchase of Seagen.
Ah, yes. the Segan acquisition. I remember reading about that.
A biotechnology company focused on cancer treatments.
Right. Seemed like a bold move.
It was a big deal.
Giving them a big boost in the oncology space.
Yeah, expanding their reach.
But it must have added a hefty chunk to their debt.
It did. The Segan acquisition alone was valued at around $43 billion.
Billion with a B.
So the question becomes, can Pfizer effectively manage this debt while simultaneously investing in future growth and continuing to deliver those attractive shareholder returns we talked about earlier?
That's a great question. I mean, debt isn't inherently bad, right?
Right.
Companies use it strategically all the time.
All the time.
But it's all about finding that balance.
Finding that sweet spot.
How does Pfizer's debt level compare to others in the pharmaceutical industry?
You're right. Debt is a common tool for companies to fuel growth. In Pfizer's case, their debt-to-equity ratio, which basically measures how much debt they're using to finance their assets relative to shareholder equity, is actually pretty much in line with the industry average.
So they're not outliers?
Not a flashing red light at this point.
Okay, that's somewhat reassuring, but you said not at this point.
Yeah.
Which makes me think there are some caveats here.
Well, the economic landscape is constantly shifting.
Right. Always changing.
One factor that could impact Pfizer's debt management is rising interest rates.
Oh, yeah, of course.
As interest rates increase, the cost of servicing that debt goes up.
Right, it gets more expensive to owe money.
Which can eat into their profits.
Yeah, that makes sense.
It's something they'll need to monitor carefully.
So debt is one piece of the financial puzzle.
Right.
What else should we be paying attention to?
Cash flow is another critical metric.
Okay, cash flow, the lifeblood of any business.
And the good news is that Pfizer generates a lot of cash.
That's good to hear.
This is a positive sign for a couple of reasons.
Okay, I'm listening.
Firstly, it gives them the flexibility to invest in research and development.
Makes sense. They need to keep innovating.
Pursue new acquisitions like Segan.
Got to stay competitive.
And, of course, continue paying out those dividends that have caught your eye.
Yeah, I'm definitely still eyeing that almost 6% yield.
It is attractive.
But you also said strong cash flow is important for another reason.
Right, because we need to make sure that dividend is sustainable in the long term.
Okay, yeah, that makes sense.
To do that, we look at something called free cash flow.
Free cash flow. I've heard that term, but I'm not sure I fully understand it.
Essentially, it's the cash flow that's left over. After a company covers its essential operating expenses.
Right, the bills.
And capital expenditures.
Okay.
It's the money they have available to reinvest in the business. Pay down debt.
Chipping away at that debt.
Or return to shareholders through dividends.
So the big question is Pfizer generating enough free cash flow to cover those juicy dividend payments without jeopardizing their future?
Based on their current projections and financial performance, it looks like the answer is yes.
Phew. That's good news.
They're anticipating strong free cash flow in the coming years. Which, barring any major unforeseen circumstances.
Right, always have to add that caveat.
Should be more than enough to cover their dividend obligations.
Okay, that's a big sigh of relief.
It's a good sign.
It's always reassuring to see a company with a solid financial foundation. Right. Especially when you're considering investing your hard-earned money.
Absolutely.
It gives me more confidence in their ability to navigate those choppy post-pandemic waters we talked about earlier.
Yeah, they're in a good position.
But even with strong financials, we can't forget about the competitive landscape.
Right.
The pharmaceutical industry is notoriously fierce.
It's a tough business.
And Pfizer faces pressure from both large multinational corporations,
the big players,
and smaller, agile biotech firms.
Yeah, those up-and-comers.
So they're coming at them from all sides.
It's a constant battle.
Right. They're not the only ones innovating and trying to develop groundbreaking new treatments.
Not at all.
So who are some of their main competitors?
Okay.
What are their strengths and weaknesses compared to Pfizer?
Some of Pfizer's biggest rivals include companies like Johnson & Johnson.
Familiar name.
Novartis.
Okay.
And Roche.
All right.
These are all titans of the industry.
Wow.
Well established with deep pockets and a global reach.
It sounds like a battle of titans.
It is a very competitive landscape.
How does Pfizer stack up against these giants?
Pfizer definitely has some key strengths that allow them to hold their own in this arena.
All right, good to know.
They have a long and proven track record of innovation.
Yeah, they've been doing this for a while.
A strong global presence.
Makes sense.
And a deep understanding of the often complex regulatory processes involved in getting new drugs to market.
Right. That's a huge hurdle for any pharmaceutical company.
It's a long and complicated process.
And as we've been discussing, they have a diverse pipeline.
Right.
With a strategic focus on areas like oncology and weight loss.
Smart moves.
Which are expected to experience significant growth in the coming years.
Yeah, those are hot areas.
So those are all good things in their favor.
Those are definite strengths, but...
So there's always a but.
It's crucial to remember that their competitors are also investing heavily in these same areas.
Of course they wouldn't just sit back and watch.
It's a constant race to develop the next breakthrough treatment.
It's like an arms race.
And no one is standing still.
So how can Pfizer stay ahead of the curve? What are some of the key factors that will determine their success over the next 5 to 10 years?
One absolutely critical factor is their ability to continue innovating.
Makes sense.
Yeah.
Got to keep pushing the boundaries.
They need to keep developing new and better treatments that address unmet medical needs.
Right. Finding solutions to problems that haven't been solved yet.
And they can't just focus on one or two areas.
Right.
They need to maintain that diverse portfolio approach we've been discussing.
Spreading the risk, so to speak.
Exactly. Diversification is key.
And they seem to be doing that.
Yeah.
We talked about their investment in AI to try and speed up drug development.
Right.
That seems like a real game changer.
It has the potential to be transformative.
Yeah.
However, it's still early days for AI in drug discovery.
Sure. It's not a magic wand.
It's not a magic bullet.
Pfizer will need to prove that they can effectively integrate these new technologies into their research and development processes.
Yeah, make it work for them.
And actually translate that into a tangible competitive advantage.
It's all about execution.
True technology is important, but it's only part of the equation.
Right.
They also need to be smart about acquisitions like the Segan deal and strategic partnerships to bolster their capability.
Yeah, absolutely. Acquisitions can be a powerful way to gain access to new technologies, expand into new therapeutic areas, or simply add promising drug candidates to their pipeline.
So it's about expanding their toolkit.
But they need to be disciplined and make sure they're not overpaying or taking on too much risk.
Yeah, gotta be smart about it.
Can't just buy everything that looks shiny.
And we can't forget about the regulatory environment, right?
That's a big word.
The pharmaceutical industry is heavily regulated.
Very heavily regulated.
And navigating those complexities can make or break a company.
Absolutely.
Especially when they're trying to bring new drugs to market.
You're absolutely right.
Pfizer has to stay on top of evolving regulations, both in the U.S. and globally.
It's a global business.
To ensure they're meeting all the requirements for safety, efficacy, and ethical conduct.
Lots of boxes to check.
It's a complex web they need to weave through successfully.
It's a challenge, for sure.
Sounds like Pfizer's juggling a lot of balls in the air right now.
They are.
Innovation, competition, regulation acquisitions.
Yeah.
And, of course, managing those financials and keeping that dividend flowing to keep shareholders happy.
It's a multifaceted and demanding business, no doubt.
It sounds exhausting.
But Pfizer does have a long and storied history of navigating these challenges.
Right. They've been around the block a few times.
They've weathered many storms over the decades.
Yeah, they've seen it all.
And have come out stronger.
And they seem to be showing a willingness to adapt and evolve, which is a good sign.
Yeah, they're not resting on their laurels.
Their embrace of AI and their bold acquisition strategy suggests they're not just sitting back and waiting for the future to happen to them.
They're trying to shape their own destiny.
I agree. They appear to be actively shaping their future.
Taking control.
Now, I think we've laid a solid foundation.
Yeah.
By examining their financials and competitive landscape.
Oh, we got a good overview.
But to make a truly informed decision about whether to invest.
Right.
We need to talk about the potential risks and rewards.
The good and the bad. Would you agree?
Absolutely. We've covered a lot of positives, but it's crucial to acknowledge the potential downsides as well.
Got to look at both sides of the coin.
Got to be realistic.
I'm ready to dive into the risk factors. What are some of the things that could go wrong for Pfizer, and what are the biggest risks facing them right now?
Well, one of the most obvious risks, and one we've touched upon already,
is the potential for continued revenue declines as the world moves beyond the COVID-19 pandemic.
Right. The pandemic bump can't last forever.
As we discussed, their COVID-19 treatments have been a major source of revenue, but demand for those treatments is likely to decrease over time.
Yeah, makes sense.
As the virus becomes less of a threat.
So that's a big question mark hanging over them.
It's a factor to consider.
That makes perfect sense. They can't rely on those pandemic-era sales forever.
Right. They need to find new sources of growth.
So what happens when that revenue stream starts to dry up? How do they fill that gap?
They'll need to rely on their other products.
Okay.
Especially those steady earners like Nurtec, ODT Vidura.
The bread and butter.
And those promising new treatments in development.
Right, hoping those pan out.
But there's always a risk
Uh-oh.
that those products won't be as commercially successful as they hope.
Right, not every drug is a blockbuster.
Drug development is inherently a risky business.
Right. Not every drug that shows promise in early trials makes it to market.
Yeah. It's a long and difficult process.
And even if a drug does get approved, there's no guarantee that doctors will prescribe it.
Right.
Or that patients will want to take it.
It's a complex market.
So many factors at play.
Exactly. Drug development is a long and arduous process with many potential pitfalls along the way.
Yeah, it's like a minefield.
It's a scientific gamble.
And not all bets pay off.
And not all bets pay off, unfortunately.
So that's a big risk factor for Pfizer.
It's a significant risk.
What else? What other potential pitfalls should investors be aware of?
Well, there's always the risk of unexpected side effects from their drugs.
Oh, yeah. That's a big one.
Even those that have already been approved and are on the market.
You never know how a drug will affect people long term.
Right. Sometimes side effects don't emerge until a drug has been used by a large population for an extended period.
So it's like a ticking time bomb.
It's a possibility.
And if a drug is found to have serious or unforeseen side effects, it could be pulled from the market.
Yeah, that happens sometimes.
Leading to significant financial losses for Pfizer.
A big financial hit.
And, of course, impacting the patients who rely on that medication.
Right. That's the worst case scenario.
That's a sobering thought.
It's something to consider.
It seems like there's a lot that could go wrong. Even for a company as large and well-established as Pfizer.
There is, but remember, all investments carry some degree of risk.
Right. No such thing as a sure thing.
The key is to carefully assess those risks and decide whether the potential rewards, in your view, outweigh the potential downsides.
So it's a balancing act.
It's all about weighing the pros and cons.
That's a good point. It's all about balancing risk and reward.
Exactly.
So in Pfizer's case, what are those potential rewards that might make those risks worth taking?
Well, for one thing, Pfizer has the potential to generate significant profits in the coming years.
Okay.
If their strategic bets pay off.
If they play their cards right?
As we've discussed, their existing products are generating strong revenue, and they have a robust pipeline of new treatments under development.
So there's potential for growth.
If those new treatments are successful, especially in high-growth areas like oncology and weight loss, their stock price could potentially soar, right?
Okay, so there's a chance for big gains.
There's a possibility.
And beyond the potential for capital appreciation, they're also committed to returning value to shareholders through dividends and share buybacks, as we discussed earlier.
So there's potential for both capital appreciation, meaning the stock price going up, and income generation through those dividends.
That's appealing to a wide range of investors.
It is. It's a good mix.
And it's worth reiterating that Pfizer is a well-established company with a long and successful track record.
They've been around for a while.
They've weathered many storms in the past.
Yeah.
From economic downturns to regulatory challenges.
They've seen it all.
And they've emerged stronger each time.
They're survivors.
Okay, so we've explored the risks. We've highlighted the potential rewards.
We've laid it all out.
And we've laid out their strengths and their challenges.
I've got a pretty good picture now.
But what does it all mean for our listener?
Right.
What's the bottom line?
That's the big question.
Is Pfizer a good investment right now?
That's the million-dollar question, isn't it?
It is.
And as much as I wish I had a crystal ball,
I wish you did.
There's no easy answer.
Yeah, I figured.
It all boils down to your individual circumstances.
Okay.
Your risk tolerance. Your investment goals.
Right.
And your own assessment of Pfizer's ability to overcome the challenges.
Right.
And capitalize on the opportunities that lie ahead.
So I guess that's why we call this the deep dive.
Exactly.
We're not here to give a simple yes or no answer.
Right.
We're here to provide you with all the information and insights you need to make an informed decision that's right for you.
It's all about empowering the investor.
Exactly. We're not trying to tell you what to think.
Right.
We're trying to give you the tools to think critically and reach your own conclusions.
With your own informed decisions.
Well said.
Thank you.
I think we've done a good job of exploring the complexities of Pfizer.
I agree. It's a fascinating case.
And I hope our listeners start to form their own opinions.
Hopefully they're seeing both sides of this story.
But before we wrap up this part of our deep dive, let's recap some of the key takeaways for you.
Okay, good idea. Let's summarize.
First and foremost, Pfizer is a massive, well-established company with a long history of innovation in the pharmaceutical industry.
They're a major player.
They're coming off a period of significant pandemic-driven growth.
Right, the COVID bump.
But they're now facing a revenue decline as demand for their COVID-19 treatments wanes.
That's a big transition.
This transition is a key factor to consider.
It's something to keep in mind.
Despite this challenge, they have a diverse portfolio of existing products that generate substantial revenue.
They've got a lot of irons in the fire.
And they have a robust pipeline of new treatments under development.
So they're not standing still.
Particularly in areas like oncology, weight loss, and migraine treatment.
Those are hot areas.
They're also embracing new technologies like AI.
Yeah, they're trying to stay ahead of the curve.
To potentially enhance their drug development process and improve efficiency.
Speeding things up.
And while their stock price has taken a hit in recent years.
Yeah, it's been a bit of a roller coaster.
They offer a tempting dividend yield.
Almost 6%.
And are trading at a discount compared to many of their peers.
They look relatively cheap.
Suggesting they could be undervalued.
It's a possibility.
So there are both risks and opportunities associated with investing in Pfizer.
It's a mixed bag.
It's a complex picture, and it's important to weigh all the factors we've discussed before making a decision.
Do your homework.
Exactly. Don't just jump in because of the dividend or the seemingly low valuation.
Right.
Do your research. Consider your investment goals.
Yeah.
And make an informed decision based on your own assessment of the information we've provided.
That's what we're here for.
And any additional research you conduct.
Always do your due diligence.
Great advice.
I try my best.
I think that's a great place to pause for.
Okay. Sounds good.
We've covered a lot of ground in this second part of our deep dive into Pfizer.
Yeah, we've dug deep.
Focusing on their financials and the competitive landscape.
We've gotten into the nitty-gritty.
We'll be back soon with part 3.
Working forward to it.
Where we'll wrap up our analysis and consider some potential future scenarios for Pfizer.
Yeah, trying to predict the future.
Stay tuned, folks. Welcome back for the final part of our deep dive into Pfizer.
The home stretch.
We've spent the last 2 segments really getting into the nitty-gritty.
Yeah, we've covered a lot.
Their financials, the competition, the risks, and the potential rewards.
All the important stuff.
It's been a fascinating journey.
It really has.
To say the least.
Lots to think about.
For the bulk of this deep dive, we've been looking at Pfizer primarily through the lens of an investor.
Right.
Someone trying to decide if their stock is a buy or not.
The million-dollar question.
But now I think it's time to zoom out a bit, look beyond the balance sheet.
Okay.
And consider the bigger picture.
The broader context.
I like that it's important to remember that investing isn't just about numbers.
Right.
And charts and potential profits.
It's about more than just making money.
It's also about understanding the impact a company has on the world. On society and on people's lives.
Their role in the bigger picture.
Exactly. And in Pfizer's case, that impact is undeniably significant.
Oh, yeah. Huge.
One of the largest pharmaceutical companies globally.
One of the biggest.
Their products touch millions, if not billions, of lives.
It's hard to overstate their reach.
That scale of influence brings with it some important considerations.
For sure.
Some might even say responsibilities.
Absolutely raises questions about their role in the healthcare ecosystem.
Right.
Their pricing strategies.
That's always a hot topic.
And how they balance the need to generate profits with the needs of patients.
Making sure everyone has access to essential medicines.
Especially those who may struggle to afford their medications.
It's a complex and often contentious issue.
It's a tough balance.
There's a delicate balance to strike between fostering innovation and ensuring access to essential medicines.
It's not easy.
Pharmaceutical companies need to invest heavily in research and development.
Absolutely.
Which is incredibly expensive.
It's a huge investment.
But at the same time, the cost of medications has become a significant burden for many individuals and healthcare systems worldwide.
It's a real problem.
It's a constant tension, and there's no easy solution.
It's an ongoing debate.
But it's a conversation that we need to continue having.
We need to keep talking about it.
As investors, it's important to be aware of these challenges.
Right.
To think critically about the role of pharmaceutical companies in society.
Yeah, not just about the bottom line.
And to consider the ethical implications of our investment choices.
It's about aligning your investments with your values.
I completely agree. I think that's one of the things that sets the deep dive apart.
What do you mean?
We're not just crunching numbers.
Right.
We're also encouraging our listeners to engage in these broader discussions about the companies they're investing in.
It's about more than just making money.
Exactly. We want to empower investors to make decisions that align with their values.
Right.
And contribute to a more sustainable and equitable future.
It's about making a positive impact.
And with a company like Pfizer that has such a global reach and such a profound impact on healthcare.
Yeah, they're a major player.
These considerations are particularly relevant.
Absolutely.
So as we wrap up our deep dive, let's shift gears one last time.
Sure.
And look ahead to the future.
The crystal ball time.
What are some potential scenarios for Pfizer over the next 5 to 10 years? What are some key trends or developments that could significantly impact their trajectory?
Well, I think one major trend that will continue to shape the pharmaceutical landscape is the rise of personalized medicine.
Personalized medicine. I've been hearing about that for years.
Yeah, it's been a buzzword for a while.
And it seems like it's finally starting to become a reality.
It's gaining traction.
It must have huge implications for companies like Pfizer.
It does. It means shifting from a one-size-fits-all approach to developing targeted therapies that are more effective and have fewer side effects.
That's the holy grail.
It also requires new ways of conducting clinical trials and collecting and analyzing data.
So it's a whole new ballgame.
Pfizer's is investing heavily in this area, as are many of their competitors.
So it's almost like a race to see who can master this new frontier of medicine.
It's a very competitive space.
And it makes sense if you can develop a drug that's truly tailored to an individual patient.
Right.
That's a game changer.
It's the future of medicine.
Absolutely. Another major trend we need to consider.
Okay, what's that?
Is the increasing focus on preventative care and wellness.
Oh, yeah, that's a big one.
As healthcare systems around the world grapple with rising costs.
Yeah, everyone's looking to save money.
There's a growing emphasis on preventing diseases before they develop.
Right. An ounce of prevention is worth a pound of cure.
Rather than just treating them after the fact.
It makes sense both financially and for people's health.
Preventative care. That makes sense. It's always better to avoid getting sick in the first place.
Absolutely.
But what does that mean for a company like Pfizer?
It's a good question.
Their bread and butter has been developing treatments for existing diseases.
It means they need to adapt and expand their portfolio.
Okay, so they need to evolve with the times.
They're already starting to do this. We talked about their push into the weight loss market, which is a prime example of preventative care.
Makes sense.
Obesity is a major risk factor for many chronic diseases. So helping people achieve and maintain a healthy weight can have a significant impact on their long-term health.
So Pfizer's are recognizing that the future of healthcare isn't just about developing new drugs.
Right.
It's about taking a more holistic approach to health and wellness.
It's a shift in perspective.
That's pretty fascinating.
It is. It's an exciting time to be in healthcare.
It presents both opportunities and challenges for Pfizer.
Yeah, there are two sides to every coin.
They need to invest in research and development that goes beyond traditional drug development.
Thinking outside the box.
They need to partner with other players in the healthcare ecosystem, like technology companies and wellness providers.
Building new relationships.
It's almost like they need to reinvent themselves to some extent.
Yeah, to stay relevant.
To stay ahead of the curve.
But they've been around for over 175 years.
That's a long time.
So clearly they know a thing or two about adapting to change.
They've seen it all.
They've survived wars, economic depressions, and countless technological disruptions.
They're like the cockroaches of the corporate world.
They're resilient.
They have a long history of innovation and a global footprint that gives them a significant advantage.
They're well positioned for the future.
But the next decade will be critical for them.
It's a make or break time.
They need to make smart strategic decisions and execute effectively.
It's all about execution.
To maintain their position as a leader in the rapidly evolving world of healthcare.
It's a fast-paced industry.
Well, we've certainly given our listener a lot to think about.
I hope so.
We've covered so much ground.
It's been a deep dive.
Their financial performance, their competitive landscape, the ethical considerations, and now the potential future scenarios.
It's been a comprehensive analysis.
It's been quite a journey.
A lot to digest.
And I think our listener is well equipped to form their own opinions about Pfizer.
Hopefully they have a more nuanced view now.
And their potential as an investment.
Ultimately, the decision is theirs.
I agree. Ultimately, the decision of whether or not to invest in Pfizer is a personal one.
It depends on your individual circumstances.
There's no right or wrong answer.
It's all about what's right for you.
But hopefully this deep dive has given you the information and insights you need to make an informed decision that aligns with your individual investment goals and risk tolerance.
That's our goal.
And remember, investing is an ongoing process of learning and discovery.
Right.
There's always more to learn.
Always something new.
And the landscape is constantly changing.
Gotta stay adaptable.
Stay curious, stay informed, and never stop asking questions.
That's the key to success.
Well said.
Thanks.
That's a perfect note to end on.
I agree.
Thank you for joining me on this deep dive.
It's been a pleasure.
And thank you to our listener for taking the time to explore Pfizer with us.
We appreciate your time.
Until next time, happy investing.